Hello and everyone. A very warm welcome to everybody present here to the first podcast session of M Tactic initiated by the marketing department of SBM. It is my delight and honor to stand here and speak to you all on behalf of the podcast team. The mission of M Tactic is to impart knowledge valuable to all the marketing students, enthusiasts. Hello everyone. A very warm welcome. Seeking answers to real life problems and experiences. To guide us for the same, we have today with us Mr. Amitabh Srivastav, Head Training and Development at Ashok Leyland. With 25 plus years of experience, Sir specializes in B2B2C, channel sales management, corporate customer sales, key account management, B2B sales, government and institutional businesses via GEM model, police, paramilitary, government, PSUs, engineering industries, profile center management, distribution channel development, channel profitability management, business strategy development, product development, advertising, promotion, brand management, retail finance, inventory funding management, customer relationships, and many more. We are privileged to have you, sir, today with us in this session. So
Thank you so
now,
much.
to moving on to the podcast, I would like to invite my fellow teammates who will be asking sir questions, and that's how we will go about it. Thank you.
Good afternoon, sir.
Good
Good afternoon, everybody. So the first kickstart question we have in our hand is, growing marketers are understanding about B2B is absolutely different you as a channel manager. That is what I feel. So the first question is very simple. What is your take on it? Can you please relate your challenges and the challenges you have faced and the experiences you have in the field in regards with B2B, sir?
First of all, good morning to all students. See, to set the context of the automotive industry, I would like to first, tell you all regarding what is the current automotive industry changes which are evolving. This will actually help to understand that in automotive industry, we have both B2B and B2C also. So as you all know and understand, and you would have read that, automotive industry is going through a constant pressure and change. It is evolving. Why it is evolving? Because today in the current scenario, there are ownership alternatives, there are autonomous vehicles, artificial intelligence, data, and electrification. You all would have heard of this. Similarly, there are the business model is getting disrupted in automobile industry. And that disruption is in the form of, subscription model is coming up in the CV industry, on-demand ride sharing. You would have seen in the private taxi industry, but this is slowly coming in the CV industry also. Then fleet sharing, and then whatever the functions which are required on demand. Then third is evolving customer expectation. The way customer was expecting in automobile, whether in CV or in passenger vehicles, 10 years back, and last 2-3 years, it has evolved dramatically. Let me give you an example of an e-commerce, and where the customer wants everything very predictive and very informed, and then they have they want it to be so easy that they can handle the entire business on mobile. So mobile experiences have also evolved. So now coming to this uncertainty, how it has changed and affected both B2B and B2C, I'm just trying to explain you all that. So this uncertainty has led to a shift from a very vehicle-centric approach in the auto industry to a customer-centric approach, right? So and this is applicable both to B2B and B2C both. Like in automobile, what used to happen was that customer was expecting only sales, service, some marketing and retail financing. But now it has evolved to like sales, service, then subscription, then how much connected the vehicles are, financing is available or not, car share, this vehicle sharing is available or not, fleet management, whether the OEM is able to provide, marketing anyway is there, then comfort and services, then charging with electrification, this charging, or even with the gases, the availability of the the charging point or the refill point, which should be there. So this is a basic context change or evolution which has happened from a very vehicle-centric approach which used to happen in the past to a very customer-centric approach, and where the customer experiences have changed a lot. So this is the first point I would like to explain to set the context right. Then similarly, I would also like to tell you that the differences which happened in the past years and how this customer buying journey in this particular category, whether B2B or B2C, is going to evolve. Like, initially the customer had a dealer. We call it in automobile industry, we call it a dealer. The customer used to visit a dealer. Then he could go and look at the brochures, vehicle brochures, and there is a traditional sales consultants which were there. And then assisted test drive, etc. was given for his experience of the vehicle. Then negotiation and finance details were happening. Then dealer was going to, for documentation, and then the vehicle was handed over to him. After that, dealer used to take care of the vehicle maintenance and service. So this was the overall, you can say, buying and managing journey of a customer who was buying vehicles in automobile. And this was applicable both to the B2B model and the B2C model. See, you could understand I could now tell you a basic difference here, both from business to business or business to customer in automobile category, like say a municipal government department where we sell ready-to-made solutions, or a healthcare department, or a military, or a paramilitary, or a police department where we used to sell, say, ready-made ambulances. So these are called the B2B sales or the government sales, right? Which is through a GEM model. GEM model is nothing but GEM portal. GEM portal is the portal by which any entity in the country has to do his sales transaction with respect to any government body in the country. Similarly, in B2C, you need to understand this entire CV industry revolves around you can say the driver. The nucleus of the entire CV industry business is the driver. So now in this coming years, or the way it is changing, the expectations which are changing, tomorrow you'll find that first a person will have a search online in CV industry. He will read the social reviews. He will read the tests. Then he will, buy, he will think whether he should buy, whether he should subscribe, or whether he should get it on rent. Then in this particular model, then he will go and check up what are the sources by which I can gather this information. Then he will go to a particular, you can say, SEO search engine, or a particular website, or a company website, and try to search and find out the model. Then he will ask the company for a driving for a test drive, and then this handling of the papers and financing, etc. happens. And after that also, customer is looking for now what he will get, whether in B2B or B2C, what will customer get over the life cycle of the product. What benefit he can get from in terms of a fuel card, what benefit he can get in terms of connectivity of the vehicle, what benefit he can get in terms of iAlert. iAlert is a feature by which the movement and the fuel dispensing and everything is captured as data, and customers sitting anywhere in the country can track his or her fleet of vehicles. So these are some of the expectations, customer expectations, which are changing. So I hope I'm able to explain you the basic context that how is B2B and B2C there in the automobile industry.
Hello, sir. So let's talk about the segments now. The first one is authorized dealers and replacement of fleets, and the other one is direct selling. When we talk about these segments, how does the channel management systems works with LCV, smaller vehicles?
So here again, I will tell you, authorized dealers, generally on the automobile industry, the vehicle services, goods and insurance and financing, everything is catered to authorized company dealers. These dealers, how they are decided across the geography of the country, looking at the industry volume in the segment we are present, we used to look at for appointing a dealer. So what is the role of a dealer? Role of the dealer is whatever services and goods in terms of vehicles which we are producing, here it has to go to the end consumer and also to the institution, whether it is B2B and B2C. The channel partner or the dealer helps to manage that in the particular geography, all the services. So whatever we do in the industry, we can also meet a direct customer, like say a commissioner in a government department or a minister in a government body. But anything and everything, whatever happens, will be routed through the dealer in terms of services, because physical products require services and spare support. So we try to do it that way.
Thank you, sir. So the next question is all about channel integration. What's your channel integration dynamics, and how do you manage challenges in integration of this original equipment manufacturers?
See, in channel integration, whatever, we are doing this particular program with the help of, again, software tools, whether SAP and other programs, where right from sourcing, right from, channel management, dealer management system, and everything is managed through a particular software in terms of whether from the sourcing point of view or product development point of view, vendor management point of view, and then further customer management and institution. So entire management happens through a particular software where the OEM is connected on the backward to the various vendors. 300 or 400 vendors are connected, which are for the producing of the vehicle, and then it is distributed across the country to various customers, both B2B and B2C, through say 200, 300 dealers and some 400 to 500 touch points. So this all is integrated in terms of sales, marketing, forecasting, financing. Everything is integrated through a proper software given by SAP.
So what are your competition strategies in LCVs, three-wheeler, two-wheeler, and OEM segments with regard to your competitors?
See, the biggest countering competition strategy is in this particular category is, how do you differentiate in your product, in your product presentation? And now, since, as I told you, that this industry is moving towards a ready solutions industry, especially the small commercial vehicles and the light commercial vehicles industry is moving to ready-made solutions. To give you more specific example, when we talk of this particular industry, actually it is more driven by applications. What do I mean by applications is like a vegetable vendor or a hardware supplier, construction equipment supplier, or the grain supplier, or many other applications which are in the lead distances, the distance which is covered by a vehicle in the lead distance of from can say 50 kilometers to say 500 kilometers vicinity. Generally in those categories, in these particular various applications, 28, 29 applications, these vehicles are deployed. So the differentiation mainly which happens in terms of the product, like product features, whatever, like I told you, in terms of how do we give a proper tracking mechanism, how do we give support in terms of fuel options, then how do we support in terms of, you are saying countering competition. Main important demand driver in this particular category is the EMI and the acquisition cost. Let me make it very simple for you to explain. Suppose a vehicle is 10 lakh rupees. So it is very important for a commercial vehicle customer to understand that what is the total amount of money the person has to pay after, after getting into all the profits or whatever he wants to make in a month. That is called, and the EMI or the equated monthly installment, if it is nearing that particular amount, this creates a huge bit of demand. Similarly, in the acquisition of the vehicle, for acquiring a vehicle, 10 lakh rupees vehicle, minimum he has to pay is 1 to 1.5 lakh rupees. This is also again a very important demand driver. However, in terms of, the categories or the demand driver categories, so basically in the commercial vehicle category, the demand drivers are in agriculture transportation, industry transportation, then trade transportation, and generally project transportation. So in all these four basic sectors, various applications are there. So where we try to give ready-made solutions to differentiate with our competitors. This is applicable even in three-wheeler category. However, in two-wheeler category, the brands are using it, two-wheelers is despite with along with personal use, they also use it for trading. Like you would have seen example of mopeds and motorcycles used in e-commerce industry, used in reefer logistics industry, and various other examples. Then in this particular industry of especially three-wheelers and commercial vehicles, small commercial vehicle, this leasing model or the aggregator model is also evolving. So if an OEM can differentiate itself with regard to how they can provide aggregation support, or where the load is like a porter or a link, which are the available aggregators in the Indian market, that is a very big differentiation, and it helps to create demand and differentiate with competition. Then the other differentiation can be in service and spare parts reach. How much is your spread in terms of reach in service and spare parts? Because as the technology has evolved from BS4 to BS6, it is very critical that the larger ecosystem of the mechanics or the people who are handling service outside, they are trained and they understand, because the diagnostics has changed a lot. So that differentiation in terms of development of the ecosystem also is a very big differentiator, which helps to support against competition in penetrating our products. Then other differentiation is strategy can be exchange or upgrade. How much support you offer in terms of exchange or upgrade of vehicle? Because as the norms have changed in the country, you all would have read about the scrappage policy given by Government of India. So suppose a person wants to take out his BS3 vehicle or a BS4 vehicle and buy a BS6 vehicle, how an OEM can support that, supports the demand, and that is a countering competition strategy. And then other benefits like fuel card or a buyback strategy after 5 years of use, and things like that, or a financial tie-up. If we have a better tie-up with a PSU bank, if you have a better tie-up with a non-banking finance company, if we have a better tie-up with a private bank. So these are the key differentiators on which commercial vehicle sales generally in the SCV, LCV, and three-wheeler category happens.
Thank you, sir. So, the next question is all about marketing strategy. Could you take us through the business plan of commercial vehicles to map the marketing strategy?
See, the most important point which students and everybody should understand is, when we prepare the marketing strategy, it all revolves only around that customer and consumer. Who's the customer? The fleet owner or the person who will put in money to buy the vehicle. Consumer, the driver who will actually drive the vehicle. So when we make our business strategy or the marketing strategy, we make sure that first point, profitability of the customer is taken into consideration, number one. Number two, how we can improve the productivity of the customer. Number three, we look at how we are supporting the customer in growing his business model, his money-making business model. Number four, we look at how we can ensure that liquidity is always there with the customer. Number five, we see that how is his inventory turnover or whatever, number of trips can be increased, whether in a day or in a month, because that means direct increase in revenue. Number six is how we are supporting the customer or the fleet owner in developing his brand equity. Number seven is how we are supporting him with his cash flow. So if we, when we make a business strategy or a plan or a marketing plan, we keep this basic customer in mind. Now, keeping this basic customer in mind, then we move to our channel partner. Then we assess the competition, total competition available, say in a particular state or in a particular dealer geography. We assess the competition in that particular category. Then third important point is what is that single important demand drive, what is the single important driver because of which a consumer or a automobile driver or fleet owner buys the vehicle. So that is called operating economics and total cost of ownership. These are two terms. These are very simple things. Operating economics means why he will buy the vehicle. Once he is putting in money, because vehicle is a project for him. He has bought this vehicle to do a business operation and earn money, not like a car or a two-wheeler, which we use for commuting generally. So this is the third important point, based on which we make in our business plan, we go category wise, we go product wise, and we go application wise, and then we go customer segmentation wise. On that, the marketing plan is made. Now, let me be more specific in customer segmentation and application segmentation. I told you that in these four basic categories of agriculture, industry, trade, and projects, there are 29 applications in which these vehicles are sold. So business plan is made around, like suppose say a gas cylinder application, or a fuel bowser application, or a vegetable transportation application. So how this will total up to a particular number, and how much competition is selling, how my product offering is placed vis-a-vis a product offering of the competition. What in terms of the dimensions of the vehicle, because in SCV and LCV, what matters is load movement per ton kilometer. This is the most important thing. How much load a particular driver or a fleet owner can move per ton kilometer, which decides its profitability. So this is the fifth important point in this business strategy. Then we see that how we can ensure that he has good manpower. The channel partner has good manpower in the business plan, which is related with the overall numbers or the budgets which we make for the business in the business plan to cover the market. Then number 5, we see whether that manpower, the right competency mapping or training or development to do that particular manpower. This is what we see. Then we also look at the product offerings. Like I especially mentioned you that now this particular industry in small commercial vehicle, light commercial vehicle, and three-wheelers, it is moving towards ready-made business solutions, transportation solutions, rather than plain products. So customers are preferring whichever company is either supporting or directly giving a ready-made product to them. Because even in the minimum requirement, a person has to, on a bare vehicle, he has to make a load body. That is a minimum requirement, or a delivery van, or a particular specific superstructure to actually serve. So this is very important. So we analyze our marketing strategy in terms of very specific application sales talk or a marketing pitch for these 29 applications. And then we decide on the volumes. Now comes the part of scalability. How we can develop this in terms of sales, service, spares, reach across the country. This is again the part of our marketing strategy. And then we look at our margins, how we can retain our margin, what will be the cost of sales, and generally giving, because the most important element is the channel partner in this. And channel partner needs to be profitable. Only then a company can be successful. How we ensure channel profitability is we ensure that channel partner for marketing our product and implementing our marketing strategy or business plan actually executes the exact the points which are given to him in terms of how to position the product, how to do demand generation, how to arrange retail financing, how to give service to at every 50 kilometers in the market, so that customer experience can be improved and enhanced. So basically all these things. And most important part in automobile generally, it is like to understand your identity, whether you are a first mover brand or you are a challenger brand. So based on that, we have to decide that how you want to position your product. Like you want to position your product in terms of cheapest product or most economical product, or your product is best for value, or your product is most prestigious, or reliability. Because in automobile, these things matter a lot. It is a very price sensitive market. So when we make our marketing strategy, we keep these points, very particular points in mind. And then we also see that, we don't come back as a laggard, that, everybody has a product, so we also make a product. Let me give you an example. This industry has just started evolving in terms of a fuel mix. Initially, we used to have diesel vehicles only in CV industry. Now, the industry has evolved in terms of three variants: diesel, CNG, PNG, and electric. So slowly, we have to work on how this customer is evolving, what is the customer expectation, how financing is looked at. So all those things need to be looked at when we make a marketing plan. And in marketing with these three fuel categories with a specific product, it is a very different ball game when we do a diesel product marketing, or when we do a CNG product marketing, and when we do a electric product marketing, despite the product being same, or despite the product doing the same work. Still, the marketing and the positioning is different. So these are the basic points in terms of business plan or strategy. And of course, then numbers and EBITDA targets, which we set dealer-wise, state-wise, and region-wise.
Sir, when it comes to replacement of fleets, how do you tie up with brands and what are the challenges you face?
See, generally, in replacement of fleets, it is not a very organized industry as till now in the CV market in India, as of now. However, it has matured a lot. When you go to the car industry, everywhere you'll find Maruti, True Value, and Toyota for sure, Honda for sure, and other players are there. But if you see the CV market, where the major players are Tata, Eicher, Ashok Leyland, and mainly these are the three big players in this particular market, we have to ensure that it is both offline and online support model, and it is generally driven by brokers. There are one or two companies like Shriram Finance and other players who are there, but it is still not very organized market. So what companies are doing, that we have developed our internal used vehicle business vertical, where we used to look at the vehicles which we get, and this is again done on two models. First model is when we scrap the vehicle and use the amount as the margin money for buying a new vehicle. Second model is when the vehicle can be refurbished and sold. So these are the two basic premises on which this exchange business or these tie-ups happen. So on these basic premises across the country, along with our existing channel partner only, we try to promote this so that the customer gets a proper service, which proper and you can say authentic service in terms of pricing, in terms of the value he should get for his vehicle, depending on the life of the vehicle which he has actually used it for. Because generally in India, it is an overload market, the vehicle abuse is very high. So depending on that, there is a scientific evaluation process which is done for the pricing of the old vehicle. So based on these two business models, we tie up either with brokers through our channel partners only, and then complete it. Then there are big partners like Shriram Auto Mall, and there are one or two more partners who also buy vehicles from the financiers' backyard, the repossessed vehicles from financiers, where the customer is not used to, he cannot used to pay the EMI and all, and he has defaulted on his EMI. So those vehicles get repossessed in the financiers. So there the tie-up also happens between the financier and those particular brokers, and they used to sell. But as far as OEMs are concerned, it is done to the channel partner only through brokers in turn, regionally or locally.
Thank you, sir. So the next question is all about external intervention of channels. How do you plan to tie up with external intervention of channels for three-wheelers and commercials?
See, as I told you, what is very important in this particular category for demand generation, first is retail finance. So in external intervention, we always get into tie-up for retail financing our products, whether it is a PSU bank or a cooperative bank for rural reach, or a NBFC or a private bank. So this is to cater to the retail needs of the customer, because 99% of the purchase in a small commercial vehicle, light commercial vehicle, all this happens to financing only. Cash buying is very low. It can be 1 or 2, at best 5%, 4 to 5%, but still 98% is only through financing. This is number one. Number two, we look at the services support. Like, if we can give a life, the total life of the vehicle, in the total life of the vehicle, he needs support on tire, he needs support on fuel, he needs support on various other features in terms of, reconditioned parts. He needs support in terms of annual maintenance contract. He needs support in terms of extended warranty. So all that is looked into. That is the way we tie up with these interventions. And there are companies which are doing this particular job to support the OEMs also and to support the customer, which is a very big market.
Thank you, sir. So the next question is, how do you leverage channel management to enhance the customer experience to get repetitive customers?
See, as I told you in the beginning, see what is most important. We tell our channel partners or in the industry also, if we are ensuring that a customer or a fleet owner or an end user, because there are driver come owner customers also or a fleet owner also, if we can ensure that how his productivity is ensured or how he gets the load, business load, how I can improve his operating economics in a month, how I can make him profitable, how I can ensure that his growth is ensured. Let me give an example. Suppose I give an option to a customer that these are 2 or 3 superstructures which you can use on your vehicle load body and you can do multiple operations. So it will enhance his productivity, that he can use it as a vegetable vendor vehicle also, grain transportation also, or use it in the form of a delivery van also. So these 2-3 applications if clubbed, so his uptime will also increase and his revenue will increase. So that is how we tell the channel partner, these are the things where he should support and leverage. And then, when we are ensuring that how his particular brand, like suppose a transporter is there in a particular area and we help him tie up with larger players, larger corporate, then also, it is very critical for the customer and it helps the customer to grow. And then similarly, how we help him in increasing his turnover. So these are 6-7 points. If we look at mostly, then it supports the end user or the customer and the fleet owner.
So, sir, the next question is, how do you integrate channel strategy to CRM with technology? How does analytics help in improve your channel integration? You might be taking all the analytics and numbers, data about the B2B consumers, customers, and B2C also. So how does this analytics helps you?
So see, in this case of analytics, as I told you that, it is very important to understand first is how the analytics is supporting in the sales process. So in the sales process, first the use of analytics is the inquiry, lead, booking, and retail management. First and most important use of analytics, which happens because it helps us to understand that what will be the actual demand in the market, which color, which model, which variant. So this is the first part. Then analytics also helps us to look at our inventory management or stock management. Then analytics helps us to do our forecasting. So the channel partner does this business forecasting, based on which we take this particular forecasting using this analytics in terms of variants, models, colors, and application back to our factory. Then factory uses the same analytics to procure the material from the vendors, which is again linked to a 3 months back cycle, 90 days ahead of the production plan. We need to plan and give it to our vendors, which to support our vendors. So all this is very much integrated. Similarly, in terms of this analytics is used to monitor the inventory funding or inventory management or the finances of the dealer. Analytics is used to monitor our own finances, and the gaps are pointed out in this whole particular process. So everywhere, because the operation size is very complex and very large and complex, and with a lot of variants and with a lot of attributes which is to be monitored. So it is done through SAP and the entire process is integrated. Like whatever is customer facing, whatever is vendor facing, and anyway plant and factory. We use the SAP platform.
So we have arrived up to the end of the session, interview session. So our last question is, when it comes to the passenger segment, do you work on separate channel or same channel for all the segments, B2B, finance advisors? Do you go with this finance advisors replacement of fleet with respect to passenger segment, or is there any separate channel for it?
No, general practice in the CV industry is the channel remains the same, both for CV and PV, because actually in the passenger segment it is called commercial passenger. Let me give you an example. Like in case of a three-wheeler, it is called a cargo and the passenger category, and this goes in entirety to the from a 500 kg category to a 55-ton category. This is both called a cargo and a passenger, but these are both in the commercial segment. So dealer generally remain commercial, passenger or customer and channel partners remains the same. So we follow the same channel. Generally, this is prevalent in the country. It doesn't happen like the way it is happening in the car industry. Cars have separate dealer, but there are also commercial use and personal use. Based on that, they are segregating. But now those dealers are more or less common with the CV, both cargo and passenger.
So we have come to the end of this session, and it has been such an honor to be a part of this wonderful knowledge sharing session by you, sir. Thank you so much for being here. On behalf of the department, I would like to extend my heartfelt gratitude to our esteemed guest, Mr. Amitabh Srivastava. Thank you, sir. Sincere thanks.
Thank you very much. Thank you all for inviting me. I hope I will be able to give some insights in this industry, and I hope I'm able to answer your questions.
Sir, definitely. We got more than what we were expecting. The answers were so insightful, sir.
Thank you.
Thank you so much, sir. And a sincere thanks to the head of specialization, Mrs. Veda Balaji, our podcast coordinator, Professor Rupesh, for giving us the opportunity and guiding us in organizing this event. Further, I would thank the team of MTactic for organizing and making this event a memorable one. Finally, I thank all of you present here for giving your valuable time, staying throughout this event, and giving your support to us. Thank you so much, guys. Let's have a round of applause for the successful completion of the first podcast by MTactics. Thank you, everyone. Thank you so much, sir.
Thank you. Thank you, everyone.